All right, everybody. How are you? Orlando here. Welcome to another week of training with the team. I'm sorry. Let me put on my camera. Today we're going to talk about the U.S. dollar, Japanese yen, and gold. Pretty much all that I trade. And we're going to see what's going on for next week. Now, it's been a while since I've looked at the charts. I mean, I didn't trade at all this past week, but I'm back now, full schedule. We're going to have a look at gold first. We're going to start with the hourly chart. Ton of levels here. I mean, these are not actually levels. I think we're at all-time highs now at gold, if I'm not mistaken. No, not quite yet. So on the daily, that's very, very curious. Um, the levels we are on. So we're going to do a top-down analysis in this market, and we're going to see what's going on, right? All-time highs in gold is at a very particular level now. Yeah, actually, let's zoom in on the daily. Yeah, I'm gonna zoom out a little bit. So we are zoomed in on the daily. As you can see here, all-time highs, we have it right here. And the correct exact level of all-time highs is, if I'm not mistaken, 34, what? Or 3,500. 3,500, 3,500. So we are quite about 500 pips from all-time highs. We are we are 500 pips from all-time highs. On the daily basis, there's a ton. There's a very, very big level here. As you can see, price has actually, you know what, guys, no, that's fine. Price has hit this particular level couple of times, really, just bouncing from it. That doesn't mean that I'm looking for shorts at all. I don't base my bias on these levels. But again, what I'm looking for is just because, I mean, just now I'm going to zoom in because this is quite exciting for me, actually. So if we go here and we take the high of this week, right? If we take the high of this week, which is that 3450, 3451 level. That would be the top, right? The top of the range. So we are going to draw that range, actually. Let's draw that range. Let me just, change the color here to a dark blue and just thicken it right there. That's much better. Won't you agree, guys? And we're going to draw another one at the bottom of the candles, right? So that's the entire range on which price has been bouncing from. You can see it here at the right, at the left of my screen. Here, very, very noticeable. And then right now we are closed above this week. So this is interesting. I'm going to use this week right here. So we close above this week. And when I say week, I don't mean like a Monday, Tuesday, Thursday week, but a candle week, which is the bottom week or the up week of the candle. Do not mistake that. I feel like I shouldn't have to specify, but again, I do because English is not my first language. So this daily candle right here closed above that week, but failed to close above the external point of the range. Interesting. That's the first very interesting thing that I'm looking for. Now, if we go to the 1 hour chart, we're going to stay on the 1 hour chart. With the blue lines being that overall range, right? And I am going to use, horizontal lines like this one, I said, this red line, which is the previous day high, right? Or this previous week's high, right? The previous week low, which should go to the weekly chart to go, but it really doesn't matter. What I'm interested in is this. This is at Friday's high. This is last week's high, and this is the level that I am looking for. See how that candle did close above the external. Remember, on the daily, that daily candle did not close above the external side of the range. But if we go to the hourly chart, you can see that we had a 1 hour close, but then price dipped below. So what are we going to do here? Well, I'm just going to look for my possible scenarios, right? Now, we have Friday's high, and this is the previous swing low right here. So this is the previous swing low. Yeah. You know what? I'm going to do this. All right, so this is the previous, it doesn't matter if it's a little bit, not quite like that. It's fine. So this is the previous swing low. On the hourly chart, you can see it very clearly. Now, the bias in this market is quite bullish, but are we going to buy at the open? I don't think so. Let's go to the 15-minute time frame, just a top-down analysis. There's a couple of things that I'm looking for at the open. I'm sorry if you find this a little bit slow, but again, like I told you, I am looking at the charts for the first time since I last traded, which was a week ago. Some family issues, but everything is fine, don't worry. So what I'm looking for, possibly for longs, that would be very good if we could open lower, right, and liquidate this low just to come with a V-shaped recovery of some sort to attack those highs. That would be my preferred scenario long for gold. That would be amazing because I would be trading with a trend, right? Let's get rid of this lower part of the range. So remember that we are at very top heavy ranges. So that's one possibility. The other one would be a short possibility. Remember, if we go back to the daily time frame, when price has hit these levels, we have seen, remember, these are daily candles, but price hit that level, and this daily candle, the previous daily candle, right, as a let's call it a 680 pip bearish candle. This one right here, a 580 pip bearish candle. This one right here, 700 pip bearish candle. So this could go either way. Remember, I just don't get married to a bias myself. So I am definitely not trading within this range. This is my no trade range right here. No trade range, absolutely untradeable. I am not placing a trade within this range. I am not trading the breakout if it goes higher, and I am not trading the breakout if it goes lower. Right? I don't trade breakouts, guys. I don't trade breakouts. That's not what I do. I trade price failures. So my preferred, it's not that it's my preferred, right? Because I would trade either side if it printed my edge. But the first one, if we open lower and we liquidate the lows with a clean V-shaped recovery, I would go for longs and attack these highs. But because history tends to repeat itself, my preferred scenario would be a liquidation of Friday's highs, New York highs, and then a sharp move lower towards these lows. At least this is the entire New York range. So let me show you what it looks like. First of all, here, this is the New York session lows, and I would love to attack the daily lows, which are right here, if we were on a short position. So yes, I have more range towards to the downside on a bearish move. And because history tends to repeat itself, if price liquidates these highs, then prints my edge. I'm not going to share my edge here. But if we have a clean price failure above Friday's highs, I would most definitely short this market towards the structure low, then New York session lows, and overall Friday lows. That's my analysis in gold. Pretty nice. So let's do the same for the US dollar Japanese yen. I haven't looked at the chart. Super choppy. Super, super, super choppy. This is the daily price action on the US dollar Japanese yen. This has been quite a headache to trade. This is the thing about the US dollar Japanese yen. When it trends in really, really trends, right? For example, here we had a 2,200 pip run, but when it ranges, it really, really ranges. So let's do the same thing. This is what I am looking at on the hourly. So on the hourly, very, very consistently trapped inside of a range. So I guess this was Powell's, um, uh, Powell's speech where he hinted a rate cut. I guess that was that, right? I don't know. But we are very, very close for possible longs. This is the hourly chart, guys. And as you can see, we are still trading inside of a range. Now, this is interesting because even though we have some bearish pressure, right? Immediate bearish pressure. There's absolutely on this time frame, absolutely no trade at all, right? So there's two particular levels that I would be interested in trading, and that, my friends, is this is Friday's high. This is absolutely a beautiful level. This is Friday's high. This is Friday's low right here. So this is Friday's low. Apparently it was here. So this is Friday's low. There we go. So this is what it looks like on the hourly. We have a Friday's high. It's not quite straight. It doesn't matter. Not everybody is. So this Friday's high, this Friday's low. Quite interesting on the bullish side of this market. So why am I saying that? Because not only we do have Friday's, previous day's high, previous day's low right here, but we also have the ranges low. Remember, let me zoom in for you. We have that particular Powell candle. And when I say power, I mean Jerome Powell candle, not power, like, strength candle. The highs and the lows of that particular day unbroken with. So on the, let's go to a 50-minute chart so I can explain myself a little bit. Actually, I'm going to stay on the 1 hour chart so you can actually see what I'm looking for. So on the hourly chart, it doesn't matter really if it's the hourly chart, the 50-minute chart, the 5-minute chart. The reason that I'm looking at the hourly chart is because I want you to look at the levels that I'm looking at. So I can make this line straight. I'm sorry about that. Now, what I would love to see, and my preferred, bias, not bias, but, possible setup on this market, or US dollar Japanese yen, of course, they would be a liquidation of, Friday's lows. And this particular range is low, right? Price failing from that liquidation, and I would most definitely like to hunt those Friday highs and the overall immediate structure highs. So the trade would look something like this. It would, I would love to see, it doesn't matter if we open here, here, or here. It really doesn't matter, right? What I would want to see is price liquidating those Fridays, lows, and that range low with a sharp move and a sharp recovery, right? And then I would target most definitely Friday's highs and the overall structure highs. So it would look something like this. That's my preferred And that would be the only thing that I would be looking for on the US dollar Japanese yen. I want to